Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday, February the 6th. This will be our chart lesson for today. And if you saw yesterday's video, you probably heard me mention that I wouldn't be trading today. So I did not trade this morning. I just got back into the office. It's a little after 1 o'clock. I'm going to go ahead and do a real brief chart lesson, and then I'm going to get out of here. So I'm not going to go into a lot of details today, but we had really from the open on, we had a pretty steady trend up through about lunchtime, and then we sold off. I would classify this, based on, prices opened at the 8:30 right in area, right in here, and we're trading maybe a point or two away from that now. So I'd probably classify this as it's probably going to end up a trading range day. It's kind of a different trading range day. It doesn't really look a whole lot like a range, but we're staying within, say, 1500, 1499, 1500 to about 1510. So that's about a 10-point range, but that's a nice size range to get a trend from one side to the other. And we may end up, before the day's open, we may make a measured leg down from here that's similar to there. And I'm looking at this. I got a trend line drawn right there, but I'm wondering if we don't have something more like this. Just see how this fits in up here. So we could be heading back up for something like that. We could have a trend more like that. That's yet to be determined. We don't have a lot of price action over here to really get a good feel. For now, the trend was, pretty much off of that first couple of swings, and you could measure that both ways, really, and it still comes out to be something very similar. Copy that one. Paste it. And this is the way I look for my lines. You can see that fits pretty doggone well. So I'm thinking we just got a little minor trend, and that may be, or a little minor channel, I should say, and that may just be a little minor channel within a bigger, something bigger here, but we'll just have to see about that. So let's talk about the trades we did have up through just before noon, the fairly decent setups. Really what I'm starting at is about 7. There was a nice setup right here. There was a trap here, and the reason I like this one, notice that we had this big move down. You had a couple of matching lows. You broke below it, then you came back up, and you tried to go higher. But this is what I really liked right here. This is really a one leg up, pull back, a second leg up. So it's really a little two-legged correction. If you went to a smaller chart, you would see that. But what I liked here is you had this nice reversal bar, and if you went long there, you got trapped. Hopefully you didn't go long there. It's not a really good setup to be going long because look at all this overlap, and what happens, it usually breaks out and snaps back. And what we did was we started the overlap here. We broke out the low side, we snapped back, and then we broke out the high side. And generally, any kind of breakout of a range, usually the bias is going to be with the trend, and the trend's definitely down. So no reason to be thinking long here, because after that move down is obviously a big sell-off, so it's really dangerous going long there. But if you got trapped, you got to exit on the other side of the bar, and you probably want to reverse because this is a nice short setup because of that trap. If it hadn't have broke below that bar on the same bar, I would tell you probably ignore the short as well. But when it breaks higher like that, I always drop a stop order in there and look to get short if it breaks through the other side, and that's exactly what happened. Easy scalp, nothing much more than that. And you wouldn't really expect a whole lot more than a scalp here unless you just got lucky and caught some huge sell-off. And the reason being is that look how long we've been away from that EMA, and you know it's going to snap back soon. And guess what? It goes down a point or two and then snaps right back, and that's exactly where it goes to. And if you were able to catch this channel, if you saw that, you might have even considered going long, especially off that trap right there. Again, it broke lower, then turned. Actually, it might have went out the top higher the way it looks here first, and if it did, not a very good setup. You definitely don't want to be going short right there off that trend channel line with an overshoot. But you might have found some way to sneak into the long side. I don't think I would have here. There's been no trend line break. If you did, it'd be a very aggressive trade. And in fact, the first long I did show right here, again, is a very aggressive trade to me to the long side. But we've had two overshoots. We had a breakout. We had a retest of the trend line, and we turned up. And there's a nice reversal bar here. All this overlap, you don't want to be going short out. There's no good short setup, and so the only thing to do here is either go long or sit tight. And another reason I like the long here is because if you drew your trend line off these first couple of bars, you can see that bounced off that. We ticked through it once there. We bounced off it once, twice, and then three times, and then it reversed, a reversal bar. So you could have gone long right there. You might have even considered going long above that small doji right there. Either one of those would have been a fairly good setup, and you know, it was off to the races. Easily a couple of points, an easy scalp. You might have even got a couple of points out of that move because there's enough room there to get a couple. But when you started getting all this overlap up here, you should have drawn this line and drug it to the top, and you would be, you know, you start to see these dojis and overlap. That's where you need to be thinking about possibly exiting, and you can see what happened. Boom, it sells off. But then guess what? We hit the trend line. We close back inside it. You get a nice, this is a beautiful reversal bar. You got to go long there. Another easy move up for another scalp. Same thing right here. A nice two legs back, another reversal bar. You go long right there. And another easy scalp. And then this, there really wasn't a good setup here. You don't want to be going long really above that bar on a first entry. And then the second entry, you know, it's way up here before you can get in. And again, you might have even, with this break here, it would have been really aggressive because there's been no real trend line break yet, but you might have even thought about going short. So, you know, what I'll do, I'll just mark that one in green because some of you might have taken it. I don't recommend it. It's not a great setup, but it fits our rules because look at all those matching highs. If you went short with a limit order right there, that's the better way to do it. To drop every, you know, when you start to get all those matching highs, just drop a little sell limit order right there, and when it ticks through, and then you don't have to go very far. Then you could get out with a scalp before you get back to the trend line because you don't know you're going to get a trend line break, and we did right here. And so this was a nice turn. You know, they generally work if you follow the rules. And basically what we got now here is a trading range. We traded up into this little real tight range, and then you got a failed break lower here below these kind of lows. And I really don't think I would have gone long yet right there. You might have because the trend is long. It was better to wait for this bar, so right there. But look what happened. Because this was a doji, it snaps back. But when it ticked lower here and then went back and broke above that, you definitely should have went long there because that's a second entry. So if you didn't get long above one of these two bars, you wanted to here, knowing that you're probably going to get a retest, and look what happens, off it goes. And this is the only one that a runner would have been good on today. None of these others would have caught a runner. But this one would have, and you could have ridden this all the way to the highs up here. But now we got a trend line break, so you got to be real careful about going long after this point. But normally what you'll see is two legs up to a new high. And you can see there's one leg right there, and then there's your next leg, and look where it goes to. That's exactly, you know, we came within. If it's not right on it, it's within a tick. You see, we came within a tick of a perfect two-legged measured move. So trend line break, two legs up to a new high, and then it sails off, and that's exactly what you expect. And so this long here might have been questionable, except for the fact that it's a two-legged pullback to the EMA. Here's your new high. One leg back, move up, second leg back. So that's a two-legged pullback to the EMA. But guess what? It's also a double retest of this breakout area right here. And anytime the market tests something twice or tries something twice and fails, it's likely to succeed in going much further in the other direction. So when we couldn't go any lower than that retest right there twice, you got to go long there on that second entry. And you can see that. And that you can see that caught a lot of people. A lot of people were trying to get short here, And you can see it caught them off guard, and look at that big burst up, and that's hitting all the stops when it reversed higher right there. That's all these early traders having to exit, and that's why you don't get in. And easy scalp, again, no runners. They came back real quick and got the runners. And then I wouldn't have recommended going long anymore after that point, especially not with a better setup than what we got here. There's no traps here really. Well, there might have been, because you got a double bottom here, and we did tick lower, but notice it never broke above it. Then you got all these dojis, so still not really a good setup. And guess what? It did break out, and look, it snaps right back and tests it, and that's what you figure. And then it went higher, and it didn't go much higher, and then you get a doubled top up here, and here's a perfect short. You've got your trend line now. You've got two measured legs up. It's a little harder to see, but there are, I did show you it was exactly where you would expect it to go on two measured legs. And then you get this double top. You can drop a limit order right there. It ticks up. It executes your short order, and you're out before you even get back to the EMA, and any runners just keep on going. You could have ridden this all the way down. This was probably one of the best setups of the day, and definitely one of the best moves of the day. But there's a couple of different ways you could have done this trade. You could have done the limit order up here. The smarter trade is to wait for this bar right here, and look how beautiful that close is. But really, because it ticked higher first, you could have gone short right below this green bar. But definitely when this closed on this very low, you go short right there, either drop a limit order a tick or so back and try to get a little better entry. But it didn't matter where you entered on this one. It was off to the races. And you could have gotten 0850 to, there's 7 points between this high and this low. And depending on how you entered it and how you exited, great trade. And it's not really a good setup here. If you saw this little trend line off the low and pulled it up, you might have recognized to go short here, but not a great setup. But you should have been thinking of possible another leg down all the same. So we'll get these out of the way, because I don't know that those are valid yet. We'll wait and see. But that was pretty much it through the, lunchtime, from 7 o'clock to lunchtime. But there's one, for sure, 1, 2, 3, 4, 5, 6 entries, and there's a couple aggressive ones, 7. And you might have even found a couple more aggressive ones in there. So pretty good day. Hate I missed trading. Again, I didn't trade today. I had some personal things that I was attending to today, and just took a day off to enjoy myself. Had some fun today, that kind of thing. So I like the way it's set up today. I wish I had, I wish I could have caught some of this. Nice trade. Hopefully you got some of it. A couple of things I did want to talk about though. I talked about yesterday about a 45-degree angle. And I got a couple of emails on that, and I think it's possible that some of you might have been a little confused. We're not drawing our trend lines on a 45-degree angle, so don't get confused on that if you took away from that in yesterday's video. We draw the trend lines based on what prices are telling us. But the point I was trying to make yesterday is that your best trends will always form at 45-degree angles. If they're steeper than that, they're too strong. And if they're narrower than that, or flatter than that, I guess you should say, they're too weak. They won't, in other words, if they're too strong, they're not going to last because they're too strong. And if they're weak, they're not real good trends. A good, healthy trend will normally sit at a 45-degree angle on your chart. And so, but we're not trying to draw a trend line at 45 degrees and hope prices fit it. We don't care about that. We're just looking for the trend and drawing our trend line based on what prices actually give us. And the 45-degree angle is just a, something you look for if you find a good trend that's at a 45-degree angle, and it's, that trend line's holding multiple times. That's a good, healthy trend. So that was the point behind the 45 degrees. So hopefully nobody else confused that, thinking that that we're looking for, we're drawing a 45-degree angle and hoping that prices hit that, that kind of thing. That's not what we're doing. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll be back to do this again tomorrow.